Hi, this is James Shugg with the Westpac's videocast for Thursday, the 28th of July. A bit jet lagged, just got back from Australia today, so excuse any stumbles, please. It's basically a treading water sort of day today. Markets just cannot get the US debt ceiling issue out of their mind, and justifiably so, given that there's a potential for the US government to simply have to cut back on its defence spending, its social welfare spending, or indeed default on some of its debt obligations as soon as next week, if no agreement is reached before then. Later on today, we get the Boner bill in the House is expected to pass, but it's likely to be rejected by the Senate. Which will lead us back at square one. So really no developments on that front, I'm afraid. That was one of the reasons why European markets didn't perform that well this morning, although US markets actually did okay in the afternoon. I'll run through some of the numbers there for you. The average loss on European markets was down 0.04%. Not that much change, nevertheless the fourth negative trading session in a row. We saw a gain on the FTSE, but losses on the French and German markets today. In fact, the German market was down almost 0.9%. On the data front in Europe, we saw business confidence surveys for July. They were very weak. Showed a steep decline, which we think is pretty much related to ongoing concerns about the sovereign debt issue in Europe, and also more general concerns about the performance of the global and the European economy going forward, given the risks that the US economy stumbles if the debt ceiling isn't lifted in the next few days. US markets, however, managed to post reasonable gains today. It's still trading as I speak. It's just after 7 p.m. London time, but at the moment the Dow's up about 0.3%. We had another rise in pending sales of existing homes, the month of June, although they did also report in that statistic that the number of cancellations, or the percentage of sales that are cancelled before they actually are completed, had risen from a norm of around 4% of sales to a high of 16%, which could be attributed, of course, to the uncertainty about the economy that's been created by the debt ceiling impasse. We saw initial jobless claims, which is a weekly measure of the number of people laid off. It actually fell below 400,000 for the first week since early April. However, we shouldn't draw too much confidence from that, because this number is always pretty volatile in the month of July, related to problems adjusting for the annual shutdown of auto plants for new model retooling. So the numbers look good, but they may not have been as good in the detail, and we might see a bounce back to the more normal levels in the next week or so. So nevertheless, that claims number and the housing number were good in the headline sense, and they enabled the Dow to post that gain, in contrast to the weaker European markets we saw earlier today. On commodity markets, not too many big changes there. Copper prices are up about 0.6%, but oil and gold pretty much unchanged. Oil's at $97.45 a barrel, gold's at $1,617.40 an ounce. The Aussie dollar is above 110 against the US dollar for the second day running. At one stage today, actually, it was trading above 1.105 against the US, although it's pulled back a little bit as the US stock market actually has given up some of its gains in late trading. It's now trading around 1.1015 against the US dollar. All eyes are going to be on the, as well as the debt ceiling issue, the US economic growth numbers for the second quarter, which are coming out tomorrow, and we'll report on them after that. Okay, speak to you tomorrow.